Hello again, everybody. Welcome back to Hot Desk, your quick tips and tricks on learning the Real Desk platform. I'm Mark, your chief desk jockey. Today, we're going to talk about owner deductions, one of the frequent questions that we get from broker owners who are new to the platform. How do I keep my commission money in the business rather than paying out my own personal bank account? So there's a really easy way to do this through the Deduction Manager, and I'll show you how to do that. So you go to the Deduction Manager, click Add Deduction, find the realtor that you want to do this for. We can call this Owner Deduction. We'll find it here, and we can say percentage of realtor commission, and then go to 100%. We'll start it today. It's not a third-party deduction, prorate, GST exempt. None of this is the case, so we'll just go ahead and hit save. And we've created the deduction, and then the next step is paying it out, and I'll show you how that looks. Okay, so now we're ready to pay out a deal for this realtor where we've created this owner deduction. So as usual, I'll go to create payments for the deal. And when I open this up, as you can see, it's got an owner deduction for the full amount. We won't bother trying to take an expense because that would take us into the negative for this payment, so that doesn't really work. That's the one thing about the owner deduction, because it takes 100% away. You can't really add any other deductions or expenses. Now, the other thing about the deductions as well is at the time that you pay this out, if for some reason you do want to pay your personal account, you can zero this out, and then it will pay it out like a normal deal. If you want to do it half and half, you can do it that way as well, right? But in this particular case, we're going to go ahead and do it the way that we plan to, with 100% deduction, and we hit create payments for the deal. And what you'll see is that the expenses are the full amount, and there's no net payment going to this realtor, and the full amount of the commission is going to the brokerage. Now I'll show you the way that that looks on the financial statistics. So the next question that we often get when this comes up is, how does this then affect taxes and the T4A? So the top two deals are commissions that we paid out before we added that 100% deduction. So there's no deal fees or anything taken off, and the net payment is the gross plus the GST. Now for this deal that we just paid out, you can see that everything is deducted off, there's no GSTs, and the net amount is still zero. So everything is retained by the brokerage and deducted. Now the T4A is still going to show that gross amount, and there's some controversy over this, and we may put it in as an option in the future to be able to have what shows on the T4A be the gross commission less the deal fees, because there are some other platforms that do it like that, and apparently both are acceptable according to the CRA. But initially, the way that we've done it is that that gross amount is what shows on the T4A, but because this is a deduction, you can remove that from your gross income, and then you get your net income, which if we were always doing this 100% deduction on every deal would be zero. So you owe zero personal taxes. So on this person's T4A, if we were going to issue it today, it would still show $16,575, but their net income is quite a bit less. So that's how to do 100% deduction of your commissions. Let us know if you have any questions about that. As always, thanks for being part of the Real Desk community.